And the Trump administration has announced new framework trade agreements with 4 Latin American nations. The deals are aimed to reducing tariffs on select products with the goal of easing inflation and lowering food prices for American consumers. Now, under the terms of the agreement, tariffs on selected goods from these countries will be reduced or eliminated altogether. For example, U.S. consumers can expect cheaper bananas from Ecuador and potentially lower coffee prices if tariffs are lifted on these products. The framework agreement includes a range of goods, but tariffs of between 10 and 15% will remain on most items. Specific items like natural resources, pharmaceutical ingredients, and certain agricultural products will see tariff reductions. According to a senior administration official, retailers and wholesalers are expected to pass along these savings to consumers. This move comes as the Trump administration faces mounting pressure to address inflation and rising grocery prices in the U.S. The cost of living has been a key issue, with inflation standing at 3%, though food prices have remained stubbornly high. U.S. inflation stands at 3%. But as we've just discussed, the inflation in food prices has been a particular concern for many American families. And with these new trade deals, the Trump administration is aiming to further reduce prices and ease the economic strain on American families. One of the most notable provisions in the framework is the removal of tariffs on imports from Argentina, particularly on pharmaceutical components and agricultural goods. Argentina, in return, has agreed to open its market to U.S. cattle and reduce tariffs on various U.S. goods, including medical devices, machinery, and even motor vehicles. This deal is being viewed as a boost for U.S. exporters, as well as an economic lifeline for Argentina's struggling economy. The agreement with Argentina comes at a time when the U.S. has been providing financial support to the South American country, including a $20 billion credit line which was approved by the U.S. Treasury. Argentina's President Javier Milei has been pushing for economic reforms, including slashing import barriers to revive the country's weak economy. Now, Milei, an ally of President Trump, has vowed to make Argentina great again and has prioritized boosting foreign investment. So, Now, this deal is expected to help facilitate. Now, this deal with Argentina, Ecuador, Guatemala, and El Salvador is part of a broader effort by the Trump administration to ease trade barriers, promote economic growth, and provide financial relief to consumers across the U.S.